Well, hello. It's very nice to be back with you again. I'm Nicholas Bonesack, the President and Head of Portfolio Strategy for Strategas, Baird's investment strategy arm. I hope that you and your families had healthy and restful Thanksgiving holidays. It was no doubt very different this year, but we can see daylight at the end of this tunnel. And so as we look ahead toward the fast approaching year-end holidays and the new year, now less than a month away, we remain impressed by both the resiliency of the economic recovery, particularly given the lack of fiscal stimulus, and more on that in a minute, and the strength of the underlying fundamentals, let's say corporate profits and consumer spending. For investors, these two inputs, an improving economy and higher profits, coupled with broadly accommodative monetary policy, think low interest rates, provide the underpinning for materially higher equity prices. And that's good news. Also important for investors to note, for all the focus on mega-cap new economy FANG names, is the continued strength of the average stock. Consider this chart of the value line arithmetic index versus the S&P 500. The value line index is an equal-weighted construction of roughly 1,700 stocks, and as you can see, it recovers off the low in March, but then spends the summer sideways before finding its footing again following the election. Some of you have asked whether the market has gone too far too quickly, and there is room for some concern in the near term. The sharp rise in COVID cases has been met with a modest slowdown in activity. These data from OpenTable, yes, the app on your phone where you book dining reservations, shows a notable decline in seated diners over recent weeks. We'll want to keep track to see if this trend intensifies before we get too concerned. It's also worth noting that the good news on the vaccine front has compelled some states and municipalities to increase mobility restrictions. This has kicked Congress and the White House into gear. $900 million to $1 billion in fresh stimulus may be close at hand. So what's the insight for your portfolio? Well, while you should always consult with your Baird advisor for the impact on your plan, we've become much more optimistic on the road ahead. Now that's not a green light to rush right in, but in our tactical allocation portfolios, we're positioned to take advantage of the building blocks that have been laid in the recovery, like the near universal right-sizing of industry, with the anticipation that a broad reopening of the economy in the spring and the unwind of pent-up demand will provide a material boost in activity, demand, output, revenue, and profitability. That is a cocktail that should provide the global synchronized expansion we missed out on following the financial crisis. Now we'll see some down days along the way, but the Baird team is ready to help you through it. Stay focused, stay healthy. We'll see you again next week.